Very good morning, participants. Today, I welcome you all to this virtual program on AQMM review. This is organized with the peer review board. It is meant only for peer reviewers today. We want to tell the peer reviewers what additionally it goes into the review while having the scores and the level for the firms. So I would now request the chairman peer review board, C.A. Chitleji, to please share his words before we take it forward. Sir.
Yes, thank you, Ruchika. I also welcome convener of the Center for Audit Quality and my colleague on the council, C.A. Durgesh Kabra, the faculty, C.A. Jayendran, and the others who are present online, and also the friends, the chartered accountants who have joined for this particular webcast. As you are aware, that peer review board has been set up at the beginning of this century, and the first vice chairman was Padma Shri T.N. Manoharan, and subsequently the peer review board has moved, and with passage of time, annually some of the other changes have been made. The intention of this setting up a peer review board was to ensure adherence to the quality by the chartered accountants, providing attest function. And members, you will also recollect that Honorable Prime Minister Narendra Modi ji on 1st July 2017, speaking on Institute Daya, stated that signature of chartered accountants are more important than Prime Minister's signature. So undoubtedly, we have to decorate our signature with the quality of performance. And that quality has to be someone checking, someone attesting. And if there are any issues, there are limitations, maybe some peer informing you. Because now these are the litigious days. Number of regulators are increasing. They are taking actions. As you are aware that in case of income tax, earlier the income tax department was happy in informing the limitations in tax audit report. But then later on they demanded that what actions you are taking against the errant auditors. And in 2018, the institute has set up TAQRB, Tax Audit Quality Review Board. So whatever feedback is received from the CBDT relating to tax audit reports, this TAQRB analyzes it, divides the communication or the errors communicated into three baskets, A, B, C. Some are minor, where the caution notice is given, and in case of major, a decision is required to be taken whether to refer the matter to the disciplinary committee of the institute. So regulators have become more agile. In fact, gone are the days, earlier 2018, earlier to that, manually the income tax officers were checking these tax audit reports, and then they were communicating the errors. So maybe number of reports scanned, there was limitation. Number of errors pointed out, that depend upon wisdom of each person doing it. But now the audit tool has been taken by income tax department, and each and every tax audit report, supposing there are say 10 lakh tax audit reports filed, each and every response from each and every tax audit report, maybe it is day or a half day's work. Once when you run the audit tool through those tax audit reports, all the errors come apparent and machine does not make any mistake. So there we have to be on guards. As far as MCA is concerned, company audits, earlier it was only inspectors at MCA. They were contented with the filing of financial statements. Really, they had no time to get into the nitty-gritties, the errors. Whenever any stakeholder filed complaint, they were examining. But now, not for company financials, it is not only MCA, but two more agencies have come into play, and they are Securities and Exchange Board of India and NAFRA. So these two agencies are also now scrutinizing the financial statements of corporate world. Secondly, as far as in earlier era, it was the departmental officer who was checking this particular financial statements. So maybe with the knowledge at his disposal, he was able to point out all errors in compliance with accounting standards, Ind AS, etc., or somewhere missed out. But now these autonomous bodies like SEBI and NAFRA, they are engaging seasoned chartered accountants who have done auditing of listed companies or who were preparing financial statements of listed companies, maybe for a decade, maybe more. And they are given assignments to really examine whether the accounting standards are complied with, whether the reporting parameters have been adhered to. And then if you see in the recent past, whatever reports with which the NAFRA comes out or the SEBI comes out, number of errors or the mistakes they point out, I think in number of cases, the audit firm is in an awkward position. In fact, they have also barred certain auditing firms from performing a test function. As a ICI, we are not necessarily subscribing to this decision making because there has to be some natural justice. And after passing through the process of natural justice, one can come to such a conclusion. But point to note is they have become more aggressive. Stakeholders also now are complaining against auditors wherever there is any error, any limitation. If you look at advanced countries, number of audit firms are in the dock before the courts. We are also becoming advanced. So this phenomena of litigation also will follow in our country. So ahead of all this litigation, external world taking note of the limitations, mistakes in attest function, it is necessary that your own colleague, the peer who understands the auditing, understands the assurance function, has knowledge about accounting standards, about the statements or standards on auditing, he goes through your files and then he advises you that, okay, these were the limitations, etc. In fact, in peer review board seminar, I also asked people that, okay, we are doing tax audit of our clients maybe for 10 years, 5 years. Please go and check your files whether you have, for the assessment year 22-23, whether you have the appointment letter in your file. And then you will find that, okay, friends or colleagues who are appointing you, maybe they are your good friends. So maybe on telephone, they say you do tax audit, etc. But ultimately, if the appointment letter is not there and if the matter comes up, the auditors will find them in an awkward position. So documentation is the core of auditing. It is said that the audit not documented is not done. And that is true of it. Sitting on disciplinary benches for
got disconnected. Yes, to join again. We got disconnected. Probably he'll come to know. You can wait for a minute. You can just send him an SMS or WhatsApp.
I have. He's joining.
Yeah, now I got it. Am I audible?
Yes, yes.
Yeah. So we want all the stakeholders, all the auditors to be more agile. Secondly, in case of auditors doing audit of public interest entities, particularly listed enterprises, now stakeholders are also interested in knowing the quality quotient of the audit firm. Even we had a meeting last month with CAG, and CAG informed us that up till now, for the purpose of empanelment, you are giving us only quantitative information. How many partners you have, how many staff is engaged, what are number of branches, which locations, etc. But what are the quality indices? And there they said that, okay, we are considering quality review certificate as one of the quality indices. And based on that, we will also give some marks, and they indicated very good marks for peer review. Considering this development at the end of government, at the end of regulatory authorities, a couple of years ago, the institute has set up this audit quality board, which Durgesh Kabra is convener. And this particular Center for Audit Quality has come out with AQMM, Audit Quality Maturity Model. Certain questionnaire is given. This is for self-learning and self-introspection. You can give yourself marks so that you know on maturity model at what count you are. Maybe initially you can do on your own, but on 1st April 2023, it is going to become mandatory. So ahead of it becomes mandatory, it was thought fit by the Center for Audit Quality to have information of this particular AQMM to all the auditors so that they can prepare themselves. And even the peer review processes for those auditing firms who are performing audit of listed enterprises, for them, this AQMM will also be examined mandatorily and while the process of peer review is on. In other cases, it will be optional. We will come out with the scheme how to get about for other assurance firms. But for those firms which are doing audit engagements of listed enterprises, for them, it would be mandatory of compliance, and also the peer review will take list of it. So I compliment Durgesh Kabra for organizing this particular webinar on a timely basis. And I'm sure that we will have advantage of these discussions. And this would be the first in its row. Maybe time permitting, we will organize more webinars. Also, in case of this peer review training course, we have included now this topic of AQMM. So there also, we will be informing members about this audit quality maturity model. I also welcome the faculty who is really expert in AQMM. He has dealt with in development of AQMM, and the information given by the faculty, I am sure that it will satisfy you. In case there are any queries, maybe you can write them in chat box so that during the course of speech or maybe after the speech, those queries also can be addressed. So with this word, I comment this particular webinar by complimenting the CAQ and the Durgesh Bhai for organizing this meeting. Thank you.
Thank you so much, sir. Thank you for the brief background about peer review board expectations of the regulators and the AQMM. Sir, I would now request Durgesh Kabraji, who is the convener for the Center for Audit Quality, to please share his words. Over to you, sir.
Thank you, Ruchika. And thanks to the Chandrasekhar Chitleji, the chairman of the peer review board, for addressing all the peer reviewers on this Train the Trainers program on the AQMM, where the AQMM is going to be a part of the peer review too when the cycle of peer review takes place. So good morning to one and all. We do have with us today N. Jendran, C.N. Jendran, who is the speaker today, and as is told by our Chitlesh sir that he's having vast experience and he has helped us on the various matters with respect to the development as well as the implementation guide also of the audit quality maturity model, and the knowledge which he has, I think when he'll be sharing with all of you, it will help all of you. Friends, as you are aware and has been also told by Chitleji that the audit quality maturity model was launched in the year 2021 from 1st of July 2021, and it was then recommendatory. Even today it is recommendatory, but it is going to be the mandatory from 1st of April 2023 for all firms who are doing the audit of listed companies, banks, insurance companies, but not the branches of this. So what is required is you can do the self-review of this course under the audit quality maturity model, and that is required to be peer reviewed by the peer reviewers. That is, the AQMM review is again required to be done by the peer reviewers. Once the peer reviewer does the AQMM review along with the peer review, then the level will be published on the website of the ICAI. So while most of the checks under the AQMM, the peer reviewer ensures that during the peer review, some additional checks are also required to be done by them during the process for the purpose of review of the AQMM. So, friends, One more thing which I just wanted to bring to your knowledge is AQMM is a set of audit quality indicator, or it is a group. AQIs are grouped at the firm level. There are two another level, which is the engagement level as well as the national level, but we will not discuss those things. That can be a part of the peer review itself. Here it is not required. And this is going to provide a conducive environment for delivering the quality services to all the firms, because various AQIs have been defined. And for defining all those AQIs and making this audit quality maturity model, a lot of research and brainstorming was done by the expert in the auditing and has gone into the development of the same AQMM version 1. Friends, the AQMM has been broadly divided into 3 sections with a total scoring of 600 points. And there are 4 levels of the firms are defined under the model, wherein level 1 indicates the nascent stage of the firm and level 4 indicates the significant adoption of the standards and procedures for ensuring the audit quality. It is important for the firm to score well under each of the sections to achieve the higher level using the audit quality maturity model. For the firms which achieves lower score of the audit quality maturity model shall be helpful. The audit quality maturity model shall be helpful for identifying the areas where they are lacking, so that they have a roadmap for implementing the flagged areas they can improve upon. This is how the AQMM would be useful for the firms and help the Center for Audit Quality in achieving its objectives of enhancing the audit quality. And this is also going to build the capacity of the chartered accountant firms who are into the audit and assurance practices. We also propose to come out with the digitized version of the audit quality maturity model shortly. For the ease of firm and the peer reviewers, the system would automatically generate the total score and arrive at the level once the firm or the peer reviewer allocates the scores against each of the parameters. So this is very important. And the reviewers would also be in a position to see the documents which is required to review the audit quality maturity model, and it will be processed through the digitized version of the AQMM. I must also say to all of you that the Institute of Chartered Accountant of India is the first in the world to have any maturity model. And why I'm saying any maturity model? Because we have 3 maturity model. One is audit quality maturity model. Across the globe, none of the countries having this audit quality maturity model, but India and ICI is first to have this. We are proud of it. Second, we have the sustainability reporting maturity model. And third, we have the digital competency maturity model. And these are well received by the international organizations also. And we have started leading from the front. So friends, I am sure when the knowledge, the expertise knowledge of N. Jayendran sir is shared to all of you by him, then I am sure that it will help you out that how the review is to be done by you using the implementation guide, taking the help of implementation guide. And we will have these kind of programs for the reviewers again in future too. We have with us today N. Jayendran, who is going to take this session. He is a partner in a mid-sized firm of chartered accountant, but having vast knowledge of handling tax, assurance, and consulting functions for more than 30 years as a practicing chartered accountant. He'll take you all through the nitty-gritties of requirements under audit quality maturity model and the expectation from peer reviewers against each of them. Okay, what exactly you have to check? What is needed from your side? How serious you should be? So the audit quality of each firms get improved, and they can be better placed in the case of level 1, 2, 3, 4, and the name can be published on the website of ICI. I'm confident that there would be a lot of learning, and you all shall discharge your responsibility diligently in respect of the audit quality maturity model review. With this, I once again thank the chairman of peer review board and also the secretary, Nidhi Singh of peer review board, joining this train the trainers program for audit quality maturity model organized by CAQ as well as the peer review board. And I'm sure that program, I think this will help all the peer reviewers to understand this subject, audit quality maturity model, better, and what is the expectations from the peer reviewers while doing the quality review at the firm level. With this, thank you all, friends, and thanks to Ruchika also, who is always taking proactive actions for various programs, webinars, and even the publications too. So thanks to her, supported by Renu also, and Apurva. With this, now I request CA N. Jendran, who hails from Mumbai, to take it forward.
Thank you, Mr. Chandrasekhar Chitle and Mr. Yogesh Kabra, to set the tone for this session. Without wasting much of time, I'll start my presentation. I have quite a few slides to clear. So,
I request you to be a bit louder.
yeah. So this presentation is for the audit quality maturity model review for the peer reviewers. And I'll start with the basic pointers, general instructions for scoring. The score is either full or zero in quantitative terms, and no grading on qualitative terms are to be done. If the firm has implemented something, then it has to get marks, whether or not the implementation is wholehearted or not, whether it contains shortcomings or not, whether there could be improvements or not. However, the peer review can make qualitative recommendations for improvement for the benefit of the PU in his report to the PRB and the PU. The IG of the CAQ on the implementation of AQMM has to be referred wherever further clarity is required. Annexure C of the PRB questionnaire requires the peer reviewer to put in his score against the score put in by the PU. So the whole objective, how this will function is this, that the firm will first self-assess and put score based on what it feels it has complied with in terms of the requirement of the AQMM. This entire scoring will be subjected to vetting by the peer reviewer, where he will put in his score against the score put in by the peer reviewer and give his reasons of why or what is the reason why his scoring is different. The peer reviewer is required to go through the entire AQM questionnaire and score in totality, and test check is not recommended. You cannot test check a few questions. You are required to go through the entire AQM questionnaire, because each question has got marks and different weights, and it would be inappropriate to do a test check of this questionnaire. This questionnaire is something that we need to go through in totality. Brief of the scoring pattern and the scheme. The scoring pattern, that is the total score that can be granted to a firm, is as follows. On practice management operations, 280 points, which comes to around 46.67%. On human resource management, around 240, which is about 40%. And on practice management strategic and stroke functional, 80, which goes 13%. So total is 600. However, each section has its own percentage criteria to be met. The grading of the firm is, as per AQM, is a minimum score received in the sections. This is explained in the next slide. At present, based on the points derived in each section, the level of the firm is determined. The following table displays the basis of scoring as per AQMM. However, if the firm has different scoring in different sections, for example, in some sections they score 50%, some sections score 75%, then the one with the lowest score is to be considered for the purpose of overall ranking of the firm. The table moves like this. If the scores received in each section is 25%, then the firm is level 1. If any section it receives 25 to 50%, the level 2, 50 to 75 is level 3, 75 in each section is level 4. Say, for example, in section 2, which is the HR, they received only 50%, whereas in the technical first and third section, they received 75%, making it level 4. Their overall ranking will be level 3 because that is the minimum score that has been received. This is very similar to that you may pass every section, but ultimately you have to get an overall percentage, which will be, you have to at least pass in each of the section. So I'll start with the first section, which is the practice management. This is the main technical session, which deals with how the firm has complied with the technical requirements of their practice. The first matter is about revenue from audit and assurance. So depending upon the revenue of the firm, revenue has to be, we have to find out if the revenue from audit and assurance function is 50 to 75%, they get 5 points. And if they are above 75%, they get 8 points. The theme behind this is that the more focused the firm is in audit and assurance, the better would be their audit quality. And therefore, those firms which do not have audit in excess of 50% do not score anything on this. For the purpose of computing this percentage, revenue is to be considered net of GST and OPE for both numerator and denominator. Revenue to be considered as per bills raised during the review period should be for the last year in the review period. For example, since this becomes mandatory from 1/4/2023, and so typically the review period would be for 2021-22. This ratio would have to be determined for March 22 year ending. Does the firm have a vision and mission statement? Does it address forward-looking practice statements, plans, etc.? The firm should not only have a vision and mission statement, but also must demonstrate steps for adoption and implementation. Some of them could be posters within their office, internal communications, awareness, etc. So the peer review is required to check whether it should not be just one vision and mission statement which is lying in one file. Overall, the people in the organization, there should be indicators to show that the vision and mission statement not only is written, but also implemented in spirit, in letter and spirit. The next area is about presence of audit manual, which has a score of 8 points. Here, the PU or the reviewer may refer to the guidance given in 1.21 on the implementation guide on what constitutes an audit manual. Just for your understanding, mere existence of pre-published checklist is not to be considered as an audit manual. An audit manual is supposed to be a document which tells how the firm conducts its audit or what are the instructions that the firm gives to its team to carry out the audit. Merely having some checklist is not an audit manual. Having checklists is separately scored somewhere later in this table, but one has to be clear that there has to be a comprehensive audit manual to score 8 points. Availability of standard formats relevant for audit, like letter of expression, represented. This is the letter of engagement, representation letter, significant working papers, reports, and implementation thereof. There should be these should be easily accessible to the employees involved in the audit exercise. Not only should it be accessible, one must also see whether the formats are generally used by the PU in respect of the documentation needs to be checked by the peer reviewer, as a PR is required to also see the implementation. For example, I may have fancy checklist, letter of expectation, representation letter, etc. But if I don't implement them and the actual letter of engagement or the representation letter, the working papers, the reports, the checklist are not in the format which is prescribed by the PU, then they cannot be getting score on this because we have to ensure that they also are implementing these. Usage of client acceptance, engagement acceptance checklist and adequate documentation thereof. These must be tested by the peer reviewer in the sample selected by them for the file review. I think most of you all are peer reviewers. So if you know that there is a sample which is based on the 10 or 12 different classes, where at least 10% of the total files have to be picked up for the sample. Now, based on that, if we have a whole sample of X number of files that we have selected for the purpose of file review, the client acceptance, engagement acceptance documentation must also be tested in those files, whether in those files these are present and these are present in those files selected by them for the file review. Evaluation of independence for all engagement partners, managers, staff training based on the extent required. The firm must identify self-interest threat, familiarity threat, intimidation, etc. Here, the peer reviewer is required to discuss and understand what methods and processes are followed by the PU for the evaluation of independence. Independence is a state of mind, and as mentioned in the Code of Ethics also, independence not only should be in words, but it should also be in perception. So one must see how the independence is implemented by the firm. The PR may also refer to the SQC document of the PU to see what policy they adopt for the evaluation of independence, and policy that they adopt must be followed. Does a firm maintain and use engagement withdrawal, rejection policy, templates, etc.? These must be tested by the peer reviewer in the sample selected by them. It is possible that in the sample that they are selected, there has been no rejection or withdrawal templates, in which case the peer reviewer can question the firm, have they done any such withdrawal or rejection from any assignment? If yes, one may go beyond these files, X number of files which have been selected, for the purpose of checking whether the use of the format which the firm has got has been carried out or not. This is what I was speaking about the checklist, availability and use of standard checklists in performance of audit for compliance with accounting and auditing standards. This must be tested out of the samples selected by the PR to ensure that the checklists listed as available are the ones which are used, subject to modification. I mean, there can be a few line items added or deleted in the checklist which has been picked up, which have been placed in the files picked up for the file review. But in principle, the form content must be in line with what they have prescribed as the standard checklist. Not only that, these checklists must be readily available to all the engagement team members. So the peer review is also supposed to ask you, where do you store them? How do they access? Where does each engagement team member have access to these checklists? Availability and use of standard formats for audit documentation of business understanding, sampling basis, materiality determination, data analysis. This must also be tested out of the samples selected by the PR to ensure that the checklist listed as available are the ones which are used subject to modification as may be required. So how do they do materiality determination? Is there a standard format to determine materiality? Are all the team members following them in the file that I have picked up for review? Are they present? Do I do data analysis? Do I do control evaluation? Do I do sampling? How do I do sampling? Is there a process? All these are to be tested by the peer reviewer. PR stands for peer reviewer. PU stands for the practice unit. Other documents related to quality control mentioned from 1 to 5 above. 1 to 5 are the previous two slides, this one and the earlier slide. Are they reviewed and updated on a frequent basis? For example, the document should not be dated. If there have been changes to any standard, the document should have been updated timely, and the peer reviewer is required to go through and see whether any recent changes to any standard of auditing. For example, recently there are some implementation guides which have been issued by the ICI. Some modifications were done a few years back to the going concern standard. So those standards have to be ensured are updated into my checklist, and my checklist is not a dated document which has not been updated from time to time. Only if there are evidences of updation, then the PU scores points. Otherwise, the PU gets 0 in this. But here again, one has to see that out of 10 updations, if 9 are done, 1 is missed out. We should not give him a 0. We should be entitled to 4 because that could be a miss. There is a policy to update it. That is what is more important. So one has to look at it fairly. Does the firm carry out a capacity planning for each engagement? The PR must evaluate on a test check basis out of the sample selected for the file review whether the PU has audit plan. Did they have an audit plan at the beginning of the assignment? Did they mention who all are the team members? What is their capability? And is the capacity adequate for the engagement? Those documents must be present in the files picked up for review. Is there a process of budgeting and planning of efforts required maintained? The PR is required to check if there is a system of budgeting and planning and whether in the file selected the same is evidenced or not. Our budget versus actual analysis of time, effort spent carried out to identify the costing and pricing. Here, the PR may test the score on the basis of the entire list of the files selected for sampling and see if the score marked on self-evaluation is satisfied in the sample. The percentage may be considered on the basis of the fees of the engagement instead of the count of the engagement. If budget versus actual is evident for the entire sample, then the score can be 20. For example, if you have picked up 25, 30 files to review based on the criteria mentioned in the questionnaire of the peer review, and those 25, 30 files satisfy the budget versus actual analysis, then it's not possible for the peer review to ensure that entire files are covered by budget versus analysis, but this could be an adequate indicator, in my view, to see whether they are entitled to get this 20 points or 15 points or 12 points. If out of the sample, a little over 50% is satisfied, then the score of the PR against the score of the PU can be 12 points. Does the firm deploy technology for monitoring efforts, utilization of tools to track each activity? The PR needs to vet the implementation of the tools for the specific file selected in the sample for review. For example, the IG also says that DCMM version 2 may be referred to arrive at the technical maturity of the firm, whether they have timesheets, whether they have task management, whether they monitor the work regularly, are these captured in time? All these are indicators to know whether the firm employs technology for monitoring effort. And if yes, they should be also found in the files which have been picked up for the file review. Does the firm have a quality review for all listed audit engagement as per para 60 of the SQC1? Is there a document of time spent for review of all engagement? So para 60 of SQC1 refers to an engagement quality review, EQCR. So in the files which have been picked up for the verification, there should be evidence that EQCR has been done in those files. And based on the sample selected and the finding of the EQCR, the scoring in the next section would be given. For example, total engagement having concluded to be satisfactory as per quarter review versus number of engagement quarter reviewed. So here the sample is supposed to be indicative of the whole because each class of the audit, I'm referring to the entire checklist, which is the entire checklist where the files are selected, where the selection for each type of audit is at least 10% of the total size of that type of audit. From that sample, one has to test whether EQCR has been done. Care should be taken that engagement of the same nature are to be considered for arriving at the percentage. Now, there are also reviews done by ICAI, committees of ICAI and regulators that carried out from time to time. There could be instances where PUs have not been subject to any external review by any committee of ICAI other than peer review or regulator. In such cases, the PU-PR should consider them as more than 90% and grant full marks. For example, if there has been no QRB, if there has been no FRRB reference, if there has been no SEBI inquiry, there has been no MCA inquiry, in which case, what do you score? What do you give them? My view, we should give them full marks because they have not been subject to any such inquiry. However, another care has to be taken that it is possible that the peer review period files or the audits have not come up for scrutiny. So what should be considered here is all communication received during the peer review cycle, irrespective of the periods to which it relates, are to be considered. For example, if your peer review cycle is 1/4/19 to 31st March 22, during this period, you may get a notice for something which is 18/19 or 17/18 because this whole process takes time. All communications received are to be considered all communications received during the peer review cycle are to be considered for the purposes of this compliance. The self-declaration in the application form may be referred for confirming if the PU has received any communication during the peer review cycle. I think there's a declaration to be done where they say whether during this period they have received any communication. That communication may also be referred for the purpose of confirming if the PU has received any communication. Documentation of the firm in accordance with SQC1. Here, the presence of documentation, the scoring basis is present of documentation, critical area of ethical requirement, acceptance, continuance of client engagement, engagement performance are given 6 points. And for the presence of documentation areas of leadership, quality within the firm, human resource and monitoring, 6 points are given. The PR is required to go to the quality review of the quality policy of the PU and see the implementation. Based on the SQC1, every firm is supposed to have a quality document or quality policy, which is supposed to be evaluated by the peer reviewer. The sample selected may be test checks for compliance. The quality policy must have clear directions for compliance with ethical standards, client acceptance, and also leadership responsibility and HR policy. The PUPR may also refer to the IG for AQMM for guidance, further guidance in this matter. But this is also an important area where SQC1 compliance is to be verified by the peer reviewer. These all are done at the firm level. So when we do peer review now, a peer review now would also, apart from the engagement level reviews, at firm level review also, these are the criteria which has to be checked by the peer reviewer. Does the firm have accounting and auditing resources in the form of soft copies of archives, question answers, firm thought leadership, or dedicated shared technical desk? So here the firm scores points if, apart from having the access to auditing and standards and accounting standards, the PU is required to have a dedicated shared technical desk. So what is a dedicated shared technical desk? It's possible that the firm may not have a dedicated person who does nothing but answering technical queries. But if the firm has identified that whenever there is a technical query or whenever there's an issue, please mark the mail or ask the query to one person who is supposed to have experience. This person should be an experienced member of the institute in the firm who is supposed to answer all the queries. This identified resource within the PU will be sufficient compliance to the requirement of the dedicated desk. The PR may inquire with the PU whether they have internal resource library or do they have access to the ICF website. Organization-wide awareness must be there of the availability of the resources. So the person who's sitting with you for peer review, if he says, yes, we have access, we have this library, etc., one must also see that this library, etc., is easily accessible to everybody, and there has been dissemination of this information to everybody in the audit team, in the firm. Is appropriate time spent on understanding the business risk assessment and planning and engagement, and how have risks been mitigated through the performance audit procedures. So every firm, as part of their checklist, as part of their audit process, must also have a risk assessment tool, risk assessment matrix or risk assessment checklist. Based on that, the PR is required to inquire into and see the documentation of compliance to this requirement and judge whether adequate time is spent. Discussion with the engagement team will also evidence the understanding gathered by the team. Does the firm follow standard delivery methodology, adoption of audit manual, adherence to practice standard and tools? This matter has been discussed earlier too, and here the PR is required to ensure that the policy and procedure prescribed by the PU is also followed by the PU. So therefore, not only should I have a rule, but I must also follow it. Number of statutory audit engaged, reworked, filing errors, information insufficiency, wrong interpretation of provisions, etc. This is a negative scoring provision where in case some rework has been done, then the firm scores negative. So this is negative scoring where the PR is required to inquire and assert from the PU the number of assignments of statutory audit. This only deals with statutory audit where they are required to rework after the issuance of the report. MR from the PU managing partner may also be kept on record, because it's possible that even if they have reworked, they may not have informed. But going through the file, when they rework or they have reissued it, the report is generally termed as revised audit report, because if I have already taken a UDIN and I've issued a new report, then definitely there will be a new UDIN to it, and the audit report must be distinguished or may have been distinguished by using the word revised. This is applicable only to the statutory audit, and the negative marking is given only if it is due to the error of the PU and not where there are changes in the FS which are attributable to the client of the PU. Typically, reissuance of the audit report is an example. For example, if the company has reissued its financial statements, not because of an error by the audit, because of some misinformation which was missed out, which was not possible for the auditor to determine at the first stage, those are not to be attributable to the audit firm. Typically, reissuance of the audit report is an example. So one has to go through the audit report to see what was the reason for the reissuance, whether it is attributable to the audit process or whether it is attributable to the client. If it is attributable to the client, whether it could have been found out by the audit team during the course of a fair audit, is all to be considered by the PR while deciding whether we have to give negative score or not. The negative scoring here is less than 5% is 0, 5 to 15% is 1, 15 to 30% is 2, 30 to 50 minus 3, and more than 50 is minus 4. More likely than not, I hope the PR fraternity does not come across these situations. But nevertheless, this is an important aspect to be definitely asked, and an MR from the PU managing partner may also be kept on record. Number of client disputes here also, other than feedback disputes. For example, the client has complained about some policy, some the way in which the audit has been done, some misconduct during the course of the audit. There can be so many reasons why the client is disputing as filed complaints. This is also the negative scoring. Here also the PR is required to obtain a declaration of the PU about such client issues and disputes, which may or may not be referred to the DC of the ICAI. It is not necessary that these disputes should be such that they have been referred to the DC of the ICAI. Even if there exists a dispute between the clients, those are also to be considered over here. So wherever there are disputes with the client, the PR is required to take a declaration to the PU, and based on the declaration of the PU, if there are such instances, one has to see the frequency of the instances for the purpose of negative scoring. Are the timing of audit interaction with management planned in such a way that it integrates with the auditor's requirements so that the audit timelines can be met? For example, frequency of backlog, engagement agreed upon and not comment, WIP, excluding client-side details. So this is more of an inquiry-based review where the PR is to inquire of any board meetings or deliverable dates that are postponed due to the non-completion of the audit by the PU. The PR may also refer to the IG for further guidance in the matter. Client-side delays are to be excluded for this scoring. The PU gets 12 points if there are no cases and 0 if there is one case. If any listed client of the PU has filed for extension to stock exchange stating audit is not concluded, then the matter is to be inquired into to see whether the audit is not concluded because the records were given late, or whether the audit was not done in time, was not planned in time. There are far too many audits because of which one audit got delayed. So these are subject to assessment to be done by the PR, and care has to be taken while awarding points over here. Client sensitization. So does the PR have awareness meeting and knowledge dissemination meeting articles document with the client related mainly to audit issues or accounting issues, legal aspects, etc.? Follow up on previous audit observation updates to management and those charged with governance. All these are criteria which indicates that the PU has a frequent client sensitization process, and he will score 8 points if he has such a process. Here, the PR may check up whether the PU scores if there is a system of client updation of changes in audit issues. Do they have a communique? Do they have a newsletter? Do they have some information dissemination? If yes, the PU scores over here. Many PUs have a system of a note being sent to the client. Such PUs will score. Many engagement teams have slides of legal and regulatory updates in their communication with those charged with governance. For example, if you're a listed company and you're making audit committee presentation, for example, I've seen so many presentations when Caro 2020 was to come in the last year, and when they were also back to Schedule 3 changes, most of the presentation of the auditors to the audit committee carried slides to explain what are the changes to Schedule 3 which have to be taken care of, what are the changes to Caro which will have to be addressed by the auditee because the auditors have to report on them. If there are evidences to show these things, then the PU scores on these points. These documented communication would evidence the eligibility of scoring here. If there are one or two matters not updated, would not disentitle the PU from scoring if there is a process of communication. If there is a plethora of changes, it's possible that one or two items have not been informed to the audit committee. But otherwise, there is a process, there are slides, there are intimation. So maybe the client, maybe the auditor did not feel that this is important to communicate. One should not disentitle them to scoring for such lapses. But if there is no process at all, then the PU does not get points in this matter. Monitored planned hours versus actual hours across engagement. The focus is on existence of a monitoring mechanism. This is a repetitive point and already been covered earlier that wherever I have done budget, I must also see budget versus actual to see whether, why did I spend more time, what are the criteria, etc. If there is a process, the PU scores over here. So PU scores in both the places. If there's no process, he scores 0 in both the places. So this has to be seen. So this generally will go hand in hand with what score you have given in the earlier slides that we spoke about. This is a very important section, technology adoption, how the PU has adopted technology in its audit process. Does it have intercommunication chats? Many firms, including my firm, have dedicated chats on audits. For example, if I have ABC audit, I have a chat which shows that this is where the team members of the audit and the engagement partners are there on a chat where they exchange notes about the progress, what is happening, what is not happening, about the issues, etc. So these dedicated WhatsApp chats, either on WhatsApp or even if you have adopted Microsoft Teams, even on Teams has a good chat, then the PU would score on this. Has the firm automated its office with automated attendance system, leave management? If they have attendance and leave management systems, which is done electronically, and for example, if there's a timesheet system which is done electronically, then the firm would score on these matters. If leave is asked electronically and it is updated electronically, then the firm will score on this point. They will score 4 points if they have such system. If they do not have such system, they score 0 points on this. Once again, existence of timesheets would entitle scoring here. So the existence of timesheet, if you see by now, we have referred it at least 3 to 4 times. So existence of timesheet spent on an engagement by the engagement team is a very important criteria because there are multiple places where this entitles the PU to scoring. So therefore, in case a PU does not have timesheets, does not have engagement time spent, etc., it would be extremely difficult for the PU to score good marks. And PR has to take care that in all the multiple places, the PU is not granted marks. And that is the reason why I said that test check is not possible for this entire checklist. And one has to do 100% testing of each item because non-compliance of one aspect may have multiple impacts across the scoring pattern. Although this section is technology adoption, a robust manual system of timesheet should also be defined so long as they are collated and analyzed by the PU for the purposes of monitoring mechanism. Digital storage of records, scan, etc. If the PU has a digital system of storing record, it scores over here. For example, many people have adopted because of once COVID came and it taught us a lot of stuff. And one of the things that it has taught to many of us is use of Microsoft Teams or other tools where we are able to work offline. We have OneDrives, we have so many aspects where we store our data offline, we do audit offline. And these have taught us quite a few things during the last 2 years of COVID. So if the PU has a digital system of storing records electronically, then the PU scores over here. If the PU has a centralized server or cloud, because of which everybody accesses the cloud and accesses the centralized server and stores their information, stores their work on such cloud and centralized server, the PU scores over here. If the digital library is owned or ICAI, if, for example, everyone has a digital library, if they have a cloud server, in the cloud server, all the accounting standards, the latest guidance note, the latest articles, the various notifications, circulars, ICAI announcements are all regularly updated into the library, then the PU scores over here. At present, ICAI does not have a digital library, therefore only own is there, scoring is allowed. ICAI is in the process of giving access to its own digital library. Of course, yes, you can go to the website and look at the various resources which is available. But if you look at the IG, it refers to the ICAI own digital library, which is under preparation. This is similar to the communication discussed earlier. If there are client interaction, if there are alerts, updates, availability of information in website, etc., indicated to the clients, then the PU scores over here. It is not necessary they have to satisfy all of them, even if they have an alert mechanism, if they have an update mechanism, if they have a mechanism to give notes, they may not update the website with this information, but these few things also would entitle the PU to score. The PU should have video conference facilities. Therefore, knowledge of Zoom and Teams video conference facilities should be adequate to grant points here. It is not necessary to have the very fancy video conferencing equipment in the office, but there should be a methodology of having Zoom and Teams video conferencing facility. The PU should score over here. This is very important because the PU, one has to see that the PU does not use non-licensed software. The PU should only use licensed software for MS Office, Windows, Adobe, etc. Then only the PU is entitled to have 4 points. And this can be evidenced by even the few laptops which are sitting with you when you're doing your PR, when you're doing a peer review. If you can look at them whether they are licensed versions or not and test it, that should be adequate compliance. Own email domains, email usage policy, etc. Having own email domain and having email usage policy entitled the 4 points. If the firm works with Gmail accounts and Hotmail account, it is not eligible for a score over here. Use of antivirus and malware protection tools. So the PU must have updated antivirus protection tools, which must be licensed on all the computers and laptops. So one way to evaluate this is that when you're sitting for doing evaluation, the people who are sitting with you during the peer review process, you can, on a surprise basis, tell them, please, I want to check up whether your machines are updated antivirus and malware protection tools. And that should give you an answer whether the firm is entitled to 4 or 0. And if that time the firm fails, then I'm sorry, you might have to give them 0 points. Data security, there must be password and access control for all the PU's data. So only on a need to know basis, people should have access to the data. And that must be ensured by understanding the password and access control policy of the PU. Cyber security measures, these are advanced port controls over the access to the cloud or in-house servers. So this is more of an inquiry based. What cyber security measure do they have? Generally, the antivirus and malware protection tools also takes care of cloud or in-house server protection port controls. But having said that, it would not be out of place to say that the last 6 months has seen so many hacks into large corporations. So this is something where the firm should have adequate resource or should have a practice to have control over these ports. But just because they've been hacked would not disentitle them, because larger corporations also have been hacked. But they must have measures. That is, here the system, here the points are for having a measure and not for countering them, not for countering a hack. Awareness and adoption of technology for service delivery. There are various audit tools which are available. For example, there is IDEA, Caseware, and other analytical tools which helps the PU to do sampling, to do checks. It does it does comparison. It find out from the plethora of data what is non-standard, non-specific. So if the PU has used such audit tools in its large audits, then here again, one has to see that you don't expect them to use this with a very small audit which gives them 5,000 or 10,000 rupees fees. This should be basically used where there are risky audits, where there are large audits, where the fees are large. If the firm has adopted these for such large audits and there are evidence to show that they have used them, then the firm will score over here, because the points are almost 12 points here. The next part of the section 1 is on revenue budgeting. Here, whether the client-wise revenue is in compliance with the code of ethics. Currently, fees from one client should not exceed 40%, and once the deferred clause of party are implemented, this will be reduced to 15%. I have kept the first column as it is from the AQMM version 1.1. However, all of you must be aware that from October 1, 2022, the deferred rules have been implemented in India by the ICAI. And as per that, there is a concept of public interest entity. And the requirement is that where the fees from an assurance client being a public interest entity is more than 20% of the total fees, that is deemed to be a threat. As per the code of ethics, the PU is required to report to ICAI the information of the client where the fees are more than 20% for 2 years. The PU will get 4 points if it does not have any such clients. Definition of PIE is to be used as per the code of ethics. So one has to see the total fees and see whether they are satisfying this criteria or not. And if they have clients which are in excess of 20%, then they will not get any points, even if they have identified and mitigated the threat. Because here the question is of having such a client, not having such a client, because mitigation of threat is something which is very subjective. So if once the PU has some clients who contribute more than 20% of the total fees, then that PU will not score over here. Fee consideration scope of services should not infringe upon the quality of work and documentation as in SQC1. Leadership is responsible for quality within the firm. The SQC document of the PU should adequately address this. This is a highly subjective matter and it is not easy to vet. And therefore, the SQC document of the PU should be gone through, and overall, the manner in which the fees of the client is, where there are larger audit fee, larger entities have a higher fee, so that the fee and the efforts are commensurate, then the firm should get 8 points over here. But nevertheless, having said that, this is a very subjective matter and needs careful evaluation by the PR. Adherence to a minimum scale of fees standard recommended by ICAI. If you know, the ICAI has CMP, Committee for Members in Practice, has a recommended minimum fees to be charged. If the PU is able to adhere to minimum fees for more than 50%, then it shall score full marks. The PU's fees register may be reviewed to determine the compliance over here. So if more than 50% are engaged, are adhering to the fee, then they get 4 marks. And if less than 50%, here once again, my interpretation would be it has to be on the basis of 50% of total revenue rather than 50% of assignments, because there could be, every firm has to carry out some smaller assignments out of relationship and out of the smallness of the entity, which may not be compliant to the minimum standards recommended. Therefore, on an overall fee basis, if they're adhering to, then I think the firm should be entitled to 4 points. So this was so far as the first section was concerned, which carried 280 points. Now, the second section, which is on human resource management, which has a direct relation with the quality of the work done. And that is the reason why this section also carries a good 240 points. One has to carefully go through the human resource management portion also of DPU to understand whether they are able to see. You will not be able to implement quality if you do not have the human resource to carry it out. If you are a firm which has got 30, 40 people, one man cannot ensure quality. Quality has to be across the organization. And that is why this section on human resource management plays a very vital role in ascertaining and noting the audit quality maturity of the firm. So the whole document is only to note the maturity of the firm. And as one says that if you are ISO compliant, then your product necessarily will be of good quality. It is not necessary to test the product, but the process has to be tested. Same is the case over here. The maturity model has to be tested, and one of the criteria is human resource. Does a firm have a process of employee resource planning for the engagement based on skill set, requirement, expertise, etc.? If the SQC document and the audit planning document mandates the team composition, the PU should get 4 points over here. So the SQC document generally would say what should be the minimum team requirement for audit of a particular size and class. And if the team composition and the audit planning document evidences that, the firm scores 4 points on this. Methods used by the firm for resource allocation, user spreadsheet, workflow tools, etc. This is a repetitive point. So if the firm has got resource allocation, they use spreadsheet, they use workflow tools where they have an allocation sheet, Excel tools to monitor the work, then this PU scores 4 points over here. Is there a method of tracking the employee activity to determine the resource productivity? The IG speaks of productivity vis-a-vis the available hours. For example, if the employee on an average spends 5 hours out of 8 hours on client work, his productivity would be 5 divided by 8 into 100. If the PU monitors such data, then it shall get 4 points. So what is required is the PU must have a monitoring mechanism to see whether their employees are productively utilized in the engagements. And if they have such a tool, if they have such a mechanism, then they score 4 points. If they do not have, they do not score 4 points on this. You cannot give them 2 points or 1 point or 3 points that they do partially or they do this thing. Either they do it or they don't do it. Based on that, they get 0.0 or 4. Does the firm maintain a minimum staff to partner ratio, partner to manager, manager to article ratio? This ratio is to be maintained engagement-wise. So if the SQC document specifies that for a particular type of audit, the minimum ratio of partner, manager to staff, etc., then it should be sufficient compliance. There one has to see that the ratio is rational and it should be also implemented. So not only should I specify in the SQC document, it should also implement it. And to test the implementation, the PR can look at the sample that he has selected for his file review. In that, if the ratio is maintained, then the PR can be satisfied. Yes, there is a policy and the PU should score 8 points on this. So most of the verification may not move beyond the file review. So apart from the engagement quality review that the PR does, the evaluation of their processes in the files which have been selected also has to be done by the PR. Does the firm monitor the utilization realization rate per employee? If the PU has such data, for example, if they monitor how they're utilizing and the realization rate per employee, then the PU scores points on this. Does the firm document the resource plan for each engagement and file it for reference during the engagement? This is similar to what is stated above. If the PU has a process of an audit plan, then it should be sufficient compliance. And that compliance can be vetted by the PR by looking at the audit plans which he or she would have found at the time of the evaluation of the file selected for the file review. employee training has got a lot of points, and therefore every PU must carry out employee training for it to score points under this section. So first and foremost, there must be a policy for employee training within the organization. So the SQC policy must mention employee training as a policy. And in terms of implementation, they get almost 24 marks if they have training. The AQMM requires that a junior level staff needs to have 60 hours of training per year. A mid-level needs to have 30 to 60 hours, and a partner required to have 30 hours. Considering what I have read in the IG and in the way in which the question is this, that the partner is partner. The mid-level would mean all the qualified assistants, all the chartered accountants that one has got within the organization. They should do 30 to 60 hours. And anybody other than these two people are required to do at least 60 hours of training per year. Now, the firm should have documents to show that the employees do carry out training at junior level. The firm can either do internal training. The firm can give them access to the various modules that self-learning of the ICAI is there. But it has to keep record that so-and-so person, article clerk, audit assistant has carried out this training, and this is captured in a document, an Excel file, or even in a register where their hours per employee are captured. If there is such a process, then the employees would be entitled to, then the PU will be entitled to 24 marks, 8 marks for each of this. For example, if juniors are not given training, but partners and chartered accountant take training, then the firm would get 16 hours. If partners do not take training thinking that they know everything, then the firm would get again 16 hours. Our CPE is based on the fact that all of us need to have continuously professionally educated. That means that we need to be abreast with the technological changes, the academic changes, the regulatory changes from time to time. And that is the reason why we have a structured requirement of 20 hours and we have an unstructured requirement of another 20 or 30 hours. The firm has to maintain records to show that they have such a policy and the employees do adhere to that policy. And depending upon that, they will score marks the firm will score marks. Now, the ratio of specialized training to general training can be 25 to 75. General training would be soft skills and basic etiquette training. Specialized training would be that if there is a new tax audit requirement, have I explained to them how to check it? If there's a new regulatory change, if there's a new RBI mandate, if there's a new accounting standard mandate, has the firm done, if you're doing for the past 3 years, has the firm done a CARO training? Has the firm done a Schedule 3 training? Has the firm told the people how to check for the changes in Schedule 3? Has the firm told how do I evaluate and answer my CARO requirement so that I can reply and I can report under CARO? These all would be indicative of firm training, and the PU would score based on what are the people, what class of people are subjected to this training. As I said, partners are partners, mid-level would be qualified assistants, junior level would be anybody who is not a partner, including article clerks. So if these people have been subjected to training, then the PU scores over here. The total score on training is almost 28 points over here. There's another 8 points where the PU would get 8 points if it has imparted training or its employees and partners have knowledge of AI and blockchain. The institute has a number of programs on AI and blockchain. So if the partners and employees have been subjected to this training, they have attended this program and they've got the CP credits for this program, then the firm would get 8 points. It is also not necessary that everyone in the firm has to have training. And if some of them have attended seminars on this matter, it should be sufficient compliance to get points. So it is not necessary that everyone, even in a good cricket team, everyone need not know batting and bowling. If some of them know bowling, some of them know batting, it is good enough. So if some of them have got knowledge of AI and blockchain, and if the firm is, and they are part of the firm's employees, then the firm should score 8 points on this. Further, audit and data analytical tool are also included here. So the firm which has access to audit and data entry would also get points on this matter. So here, not only should I have knowledge, I should have used this for the listed entity, banks, and the Insurance and Companies Act engagement. So therefore, I may have AI and blockchain knowledge, I may have audit and data analytical knowledge, but if I have not applied them to the audit that I've carried out, then I don't score here. So I must have access to people who have this knowledge, and they should have applied this wherever necessary during their engagement. That is what this requirement says. The next point is about whether the firm has a performance management culture that is rewarding high performing employees and those who demonstrate high level of quality and ethics. The PU scores here if it has appraisal plan which it implements and follows. So therefore, if there is an appraisal plan, if there is an appraisal methodology, the PR may or may not have looked at this appraisal methodology in the past, but now because it's part of AQMM, the PR is also required to look at how does the firm do its appraisal, what is their appraisal questionnaire, are there scores, do they reward employees who are high performance, or those who demonstrate high levels of quality and ethics, and if there is such a process, the PU scores 8 points on this. Does a firm evaluate a team composition overall to build a team strength, for example, number of managers, assistant manager, peer assistant, etc.? This is similar to the earlier issue of having a mandated requirement of minimum team size for certain types of audit engagement. So if the PU satisfies that requirement in the earlier section, the PU will also get points over here. So once again, just to reiterate, as I said, test basis is not possible, because if I have evaluated that and given them 0 when they had given them 8 marks over there, I must necessarily move here and give them 0 here also, because they would be scoring 0 here also, having scored 0 in the first section. Does the firm maintain and monitor the employee turnover ratio and identify measures to keep it? So the firm must have a methodology. This issue is self-explanatory. The firm has records to show that it is monitoring the employee turnover and having why and what is the reason. Then the firm should get 8 marks. Maybe an exit policy, exit questionnaire may also be an interesting point, which the firm may implement to know whether the firm is entitled to this 8 point or not. The ratio again has to be kept for the last year of the review period. For example, if 20, 21, 22 is the review period, if the ratio, if it is maintained for 22, I think should be adequate compliance to the requirement. Here, this is a purely statistical information which gives marks. So as on the last day of the review period, for example, see, the review period is dynamic. I have a review period from 1/4/19 to 31st March 22, which I will do review possibly in 23-24. So if my review period is this period, then depending upon the number of employees. Now, the question is, when do I check up the number of employees? So in my view, on the last day of the review period is adequate information for the purpose of determining, because during the period I may have less or more, but one should score on the basis of on the last day of the review period. So if they have 10 and above qualified personnel, they get 20 points. If they have 8 to 9, they get 16 points. 6 to 7, they have 12 points. 4 to 5, 8 points. If they have up to 3, then they get 4 points. Supposing the firm has no chartered employees at all, then they don't score any point in this section against this clause. So this pure statistical information, and statistical information as on the last day of the review period is what is my view on this matter. Because it's not possible to find out a daily weighted average. It's too much of a complicated exercise. So on the last day of the review period is adequate compliance, and to give them score on that basis. However, if the firm has carried out a weighted average daily basis, then one should not ignore those workings also. Does the firm evaluate the employee relation with the firm to identify reasons for turnover? If records are maintained for this, then the PU score, for example, if they have an exit policy, if they have an exit questionnaire, and those documents show why they have left, then the firm scores on this point over here. If the firm has statutory contribution, if they have PF, if they have health insurance, if they have other benefits, then the PU scores 8 points at this if they have PU and other benefits to their employees. It is not necessarily that all employees should be covered, but substantially large number of employees must be covered. Because the firm may have a policy that somebody has to come to at least 6 months for him to come into the health insurance or to come under PF or to come under what are the statutory requirements of. For example, they may give them conveyance allowance after 6 months. They may give them leave after 6 months. So there should be a policy and sufficiently large number of employees must be covered by it. A few employees not being covered would not disentitle the firm from getting 8 points. Here again, it's either 0 or 8. If they have such policy, they get 8 points. Otherwise, they get 0. It's a yes and no answer. Does the firm evaluate what kind of audit does it have a revolving door between different engagements? Revolving door is basically how you exit out of an engagement. You do multiple engagements. The PR must look at the AG for the meaning of revolving door because it's a complicated exercise. So the PR may look at the AG for the purpose of revolving door. Is basically one way to look at it is from a particular assignment, if the employees get poached by a client, or the same employee does multiple audits, that's also a way to look at the revolving door. So the IG has given quite a clear meaning to the word revolving door. So the PR may look at the IG for the purpose of revolving door. Progress of people through an established framework and time commitment of managers, partners, engagement level review, and overall performance evaluation reward mechanism of differential levels. There's a dedicated performance appraisal policy where the employee has clear understanding that performance is rewarded, the PU will score. So typically many firms partners are those who have spent X number of years, they perform well, etc. And then they're evaluated and they graduate to become a partner within the firm. So if there's a detailed process, if there's a performance appraisal where good and intelligent, good and hardworking employees are getting evaluated and their performance is evaluated, then the firm PU scores 8 points on this. If you see, many of these issues are repetitive, so therefore the PR must be cognizant of what score he has given earlier for the purpose of re-evaluating. So there should not be inconsistent scoring for the same attribute in two different sections of the AQMM. Access and use of technology infrastructure methodology for better enablement of day-to-day, including favorable remote working policies. So does the firm have system of giving them laptop, desktop, software tools, including Zoom, MS Teams, for connectivity of the firm would score on this point. For example, if tomorrow one more COVID was to hit us, how does the firm get affected? The last COVID, we were not prepared for it. We learned a lot. But now having learned, have we got a system in place? Have all our employees got technology? Are we making sure that they have access to the internet at home? Do they have access to remote server if tomorrow there's another lockdown? These are all questions which will entitle the PU to get 8 points. And the PR has to see whether the PU satisfies them fairly to see whether there is an infrastructure of laptops, desktops, and whether there are tools like Zoom, MS Teams, etc. are prevalent in the firm and the people have knowledge of it and how often do they use it. Favorable remote working policy does not mean that the firm has to encourage remote working policy. The only thing is that if tomorrow there is one more lockdown, there is one more reason why I'm unable to move out, is there a methodology of making them work from home? Coaching and mentoring program investment, especially for women colleagues to enhance the diversity of audit leaders in the profession. If the gender diversity is good, where at least 33% of women and there are mentoring plans for them, the firm should score on this. The IG talks of having crush, etc., but it is very difficult for mid-sized firm to have a crush, etc. But if the firm does not has gender diversity and gives the lady employees the maternity leave, gives them leave with pay, and takes care of them, makes adjustments to the requirement during post-maternity period, then the firm scores on all of these things. And otherwise, the firm does not score on these matters. Special policies to provide people time to rejuvenate, especially after busy audit season. The firm should encourage breaks after busy audit season to score at this point. For example, many firms, once our November pressure is over, the audit team is given a break. The audit team is encouraged to go on leave so that before the next season, next round of quarterly reviews, next round of audits start, they have means to rejuvenate themselves. Those firms, if they encourage such things, then they will score on this point. Focus policy and support for staff well-being, engagement, and communication. Whether any plans are in place for employee well-being, like special transport arrangements, etc. For example, during COVID, did the firm have policies to let them come by first class? Did they have policies to have flexible timing so that they could come during non-peak hours, go during non-peak hours? These are all focused policies for staff well-being. And if the firm demonstrates these policies, then the firm scores over here. And establish mechanism to listen to people and their views and suggestion. Credible employee survey and its outcome demonstrate how well people are taken care of and heard. The appraisal process can have an employee feedback, etc. Such a suggestion box, feedback form may also be an option for scoring over here. Standards of recruiting people, assessment methodology, evaluation of quality and fitment to the job and culture. IG of AQ may be explored for assessment methodology over here, and how the firm has to carry out the recruitment. And there are detailed guidance in the IG on this point to score 4 points. Are the employees of the firm compensated as per a defined approach where salary is mapped to the knowledge and experience level of the employee? Yes, most of the people would be required by force, by market pressure, to pay people who are more knowledgeable and more experienced. The IG of AQMM can be explored for assessment. More likely than not, the firm is being in the marketplace is forced to compensate people who are better knowledgeable, better experienced. Otherwise, they would be looking at their exit. So if the firm evaluates and frequently updates the employee packages, then the PU scores points on this. Once again, the ratio of qualified people to the total employees, including partners, scores points over here. So earlier, the requirement was only chartered employees. Here, including partners, if they are up to 30% of the total staff strength, they get 4 points. If they are between 30 to 50%, then they get 8 points. And if they're above 50%, they get 12 points. So depending upon the total strength of the team and number of qualified people, the firm on that statistical score scores points over here. This again has to be checked up on the last day of the review period. Post-qualification certification obtained from professional bodies, etc. For example, if they have DSA, if they have other information systems audit, etc., whether the partners are complied with the CP requirement, etc. So if all of that is adhered to, if the firm has DSA, if the firm has CSA employees, then the firm scores 8 points at that. The IG, however, says where firms are not involved in any information systems audit or engagement with complex IT system should not be rated for this competency, in which case, in my denominator also, I'll not take 8, in my numerator also, I'll not take 8, and then accordingly find out the percentage. Members with specialized courses or certification, for example, if supposing the firms are required to do Ind AS, if the firm is doing Ind AS audit, then number of people who have got certification of Ind AS, accreditation of IFRS, etc., are scored here. This is again a statistical information of the staff. The PO will score on the basis of the data as on the last day of the review period. I keep saying one thing, that firm will be better based on the larger review period, but one has to take care to see that it should not happen that just 1 week before the last day of the review period, I've employed 10 people and then within 10 days afterward they have left. So the PR must evaluate and ask questions whether those people are still around or not and what happened to them, to be sure that it was not only to bolster the scoring over here. Here, this is the process, this is the requirement where on the basis of key performance indicator, performing evaluation, the firm and the partner is carried on. If the PU has written KPI, the PU scores over here. KPI stands for key performance indicators. If there are key performance indicators mentioned by the firm that these are the key performance indicators, if they are being adhered to, then the firm scores over here. The IG of AQMM specifies the various performance indicators. It is not necessary that all of them have to follow. Those are only examples of performance indicators. The firm may pick 1 or 2 or 3 of those performance indicators for the purposes of evaluation of the firm and the partners. What is more important is that method and measurement as above should be determined and specific. The frequency should be fixed. And engagement partners are reviewed based on the review results of the engagement of each partner. If the firm answer is in affirmative, then the PU scores points. So based on how an engagement partner or engagement team has carried out the work, the feedback, the quality of the work done, that will decide if the appraisal is done on the basis of that, then the firm scores 8 marks on this. So here again, there is 32 marks for having a laid down policy of key performance indicators, doing it regularly in specified intervals, and at engagement level, quality are to be checked for the purpose of the appraisal. If all these 4 criteria are there, the firm scores 32 points on this. So therefore, every firm needs to start working, and the peer reviewer also are supposed to be abreast with what are the requirements. As I say, looking at the IG would be very helpful in this matter. My job is only to explain in 2 hours. I can't reproduce the entire IG over here. But wherever I feel the IG has to be referred to, I have said that please look at the IG over there. This is so far as the HR is concerned. As you see, many of the criteria may not have a direct relation with the quality, but they have an indirect bearing on the quality of the firm, because unless I have systems and team to take care of my quality, my technical compliance would be a begging. And that is the reason why HR is also an important aspect of the quality. And one should not think that what has HR got to do with quality of the firm. It's the people who make up for the quality, and therefore, unless they comply with the HR requirements, the quality on the technical side would not come up. The last section is the practice management strategic functional section. These are more strategic related questions on which the PU scores points. Does the firm manage the following attribute relating to the assurance partner to maintain the same and optimal level as deemed fit for the respective organization? Does the firm have a balanced mix of experienced and new assurance partners? So here is again a statistical information. If the average age of the partners is more than 5 years, they get 4 points. If the average partner experiences more than 10 years, I use the word age, it is wrong. It is average partner experience. Experience should be considered as a partner proprietor in practice, irrespective of whether they have been with the firm or not. For example, I may have an employee who's been with me for 15 years, and I made him a partner. He got a certificate of practice only 2 years back. Then his experience should be counted as only 2 years. Since the marks are given, that's what I meant by saying, since the marks are given based on the partner experience, any experience prior to obtaining certificate of practice should not be considered for the experience. Partners conducting assurance practice should only be considered. So therefore, here, what has to be considered is those partners who are doing assurance practice. If there's a partner who does only tax work, has not signed a single assurance work, he should not be considered for the purpose of finding out the average. So he will neither be in the numerator nor will he be in the denominator. So if my average partner experience is more than 5 years, I get 4 points. If my average partner experience is more than 10 years, I get 8 points over here. This is again a statistical information. Is the firm compliant with the ICA Code of Ethics, Companies Act 2013, other regulatory requirement in relation to professional independence and conflict of interest? If yes, then they get 4 points. This should be based on inquiries of the major audits which are there as part of the sample selected by you. Is there a whistleblower policy within the firm? If the firm has a whistleblower policy, then they get 4 points. If the firm does not have a whistleblower policy, then the firm does not get 4 points. A whistleblower policy typically is if there's a policy by which any employee can mention that a particular team member does not carry out the work diligently. If there's a policy, it allows people to speak up, then the firm gets 4 points on this. Here again is the statistical information, number of branches and associates and network firms and affiliates. Up to 3 gets 2 points, 4 to 7 gets 4 points, 8 to 15 gets 6 points, more than 15 gets 8 points. If there are no branches would be 0 points, which means that in my view, where there's only one office of the firm, it should be considered up to 3 and get 1 point. Our branch level activity centralized and decentralized in accounting, invoicing, and payroll processing. Factual answer, if there's no branch, then the PU will get 8 marks as the accounting invoicing will be at one place. And if supposing the firm or the PR feels, no, since there is no branches, then I should not give them any point, then from the numerator and denominator from both the places, you must reduce 8 points. You will come to the same answer. Physical and logical security of information are extended and implemented across locations. For example, there should not be open door policy to come to the firm. There must be security guard. There must be access control. This is what the IG also states for the parameters. The PR may refer to the IG for the parameters to know what is the meaning of physical and logical security. For logical security of information, the password control, the access control, need to know basis control, all these would give them 8 marks. Are there adequate DA tools and IT infrastructure? So DA is data analytical tools. So if we have access to IDEA software, if we have IT infrastructure, if I give access to everybody to use laptops, then the firm scores 12 points on this. This is repetitive. We have already seen, as I said, again reiterating, and therefore if one has to be consistent in giving the reply. If you have given marks, if you're not given the marks earlier because they didn't have DA tools, they cannot get marks here. So therefore, one has to make sure that the answers are consistent across the entire AQMM document, because there are a lot of repetitive points which gives you marks on the existence or otherwise. And therefore, the answers have to be consistent. And that is the reason why one cannot do a test check on the answers. Is the infrastructure adequate in terms of internet, intranet, network, bandwidth, etc.? Depending on the bandwidth, there is a guidance in the IG as to what is considered as adequate. Based on that, if the bandwidth is adequate, the PU will score marks over here. Typically, even when you are sitting over there, if you do not have adequate bandwidth for your access to your stuff, you should question them. Why is the internet? It may happen at times the bandwidth does drop. You must ask for a number of people, what is the bandwidth that I have chosen? What is the plan that I've chosen? Based on that, the IG has a table which shows how the marks are to be given. Then if it is adequate, they get 12 marks. If it is not, they get 0. So if the bandwidth is adequate, the PU scores, otherwise it will get 0. You can't get that. No, I think we should give them 6 points. I should give them 4 points. I'll give them 8 points. You either give them 12 or you give them 0. This graded approach is not envisaged in the IG and the AQMM. Practice credential, these are important criteria. Is the firm peer reviewed? If yes, then they get 4 points. Empaneled with RBI and CAG, if yes, they get 8 points. Is there an advisory as well as a decision to not work to? If it is yes, you get -5. If it is no, you get 0 point. It's a factual answer. Have any government body authority evaluate the performance and to the extent of debarment of blacklisting? If it is yes, you get -10. If it is no, you get 0 points. It's again a factual answer. Any negative assessment in the report of the quality review board? If there has been a negative answer, or if there's been a report of the QRB which says is that you have not maintained quality, every QRB has suggestions which is made by the quality reviewer. Suggestions are not to be taken as negative assessment, but if the quality reviewer has identified serious non-compliances and the QRB has given a report of negative, then there will be -5 on this. So this again is a negative scoring, a factual answer. Has there been a case of professional misconduct on the part of a member of the firm? If yes, -5, otherwise no. So this bulk of this is negative scoring. All of them are factual answers. So one has to evaluate the factual answer, and based on that, we must give them scoring over here. So this is where I come to an end of the entire. I have covered the entire questionnaire. I don't think I missed out any of the questions which have to be answered by the PU in their AQMM document, and which has to be checked by the PR in the AQMM document. At the end of it, I'd like to state a few things. The views expressed in the foregoing slides are my own and are not what necessarily PRB may state or PRB manual may contain. The PRB manual is being updated for the possible answers on these AQMM also, which is under consideration, will be shortly released, is what I'm told. The views are expressed based on my reading of the AQMM and the IG on the same. The final views of PRB and those contained in the PRB manual may be different and are to be considered as the final position in the scoring under the various clauses of AQMM 1.0 revised. Thank you. I think you're muted.
Sorry.
Yeah.
Yeah, thank you so much, sir. It was quite interesting, and you have covered each of the parameters, the expectations from the peer reviewer against each of the parameter. But we have few questions from the peer reviewers which we would like to take up before we finally conclude the session.
Yeah.
It says that, if the peer review process is completed and the certificate is received in November 22, can PU additionally get AQMM review by the same peer reviewer or the other reviewer?
Sorry, what is
it just says that, my peer review is being completed in November 22. Now the mandate comes from 1st April 23.
Right.
So can I get an additional AQMM review is one.
Yeah.
And it would be done by the same peer reviewer, or I have a different reviewer.
Okay. I will answer the first aspect as my understanding, but I think CA Nidhi Singh can answer as to what the PRB is going to be looking at. My understanding is this, that I can get my AQMM score separately evaluated by a peer reviewer. For example, if in round 1, I am in level 1 firm, I have worked on it and I don't have to wait another 4 years to get the next level. So at my own cost, I can request for another review of my AQMM score is my understanding of the regulation. But I think the best person to answer would be CA Nidhi Singh from the PRB Secretariat.
Yeah, Nidhi.
Yes, I'm here. Actually, the same reviewer has to do the AQMM review also, but if for some reason he is not available, then we can allot another reviewer.
It's basically that, the firm has to approach the peer review board and they will assign the reviewer. Most probably it would be the same. In case of non-availability, then we'll have a separate reviewer. Because the review has been done for that particular year, for that particular period, 3 years.
Yes.
And you would want the further review to be done by the AQMM reviewer. Could be the same. Yeah. Mostly would be the same.
Same.
Yeah. Sir, thank you so much. The next question is, the peer reviewer has to check the AQMM of sample files selected for peer review. Can he select different files for both the procedure?
Yes, I think he can check the different files, but it would just increase his verification process if the answers are going to be better, and if he feels comfortable. If he's not comfortable with the sample that he selected for this, I'm quite sure it doesn't stop him from selecting more files. My observation was that having selected a plethora where you have covered the entire gamut of in your peer review, there are various sections A, B, C, D. For example, bank audit, there's one section, listed company, there's one section, about this turnover, there's one section, and you're supposed to select a sample which is up to 10 or 15% per section. Your sample would be indicative of the whole, and therefore working on this should give indication. But if he feels inadequate, he can go beyond. That's the way I look at it.
Agreed, sir. Yes, it's a review of 3 year period.
Right.
So I think the peer reviewer, while doing the peer review per se, would go through the systems and procedures for 3 years.
Correct.
AQMM is evaluated on a date where we are marking on a particular date. But the processes, policies, as mentioned in a lot of the clauses also, which requires each engagement. While we have spoken and you have spoken that the majority would suffice. Agreed. But then for checking all those, you've gone through the process for 3 years files. You've selected a sample. So broadly, that sample should cover. Yes, if you take separate files to that, it will add on to the work. But yes, one can surely. Yes. Sir, one more question which has come up is, that the fee management, the fee structure which is prescribed by the ICAI may not be possible to be followed in smaller cities. So, they have said that, these firms are providing excellent services to the clients. So how do we deal with this?
I think the recommended fees also covers Class A metros and other cities. So as I said, if you're unable to get at least 50% idea to the recommended fees, then you would not score points on this. That's all. It's a question of not scoring points on that. It does not mean you don't do quality, but it's a criteria for your scoring. You would not score points on that. And it's not that you have to score 100%, you have to score 50% to get the full marks. So even if you don't cover 50% of your total engagements, probably you will not score points on it.
Agreed, sir. Anyways, this is the requirement which was there as a peer review requirement also in the checklist. So nothing new. Yes, the marking becomes new, but this is not a new requirement as such. Sir, one member wants to know, does the resource planning requires the number of members or the technical skill which should be required at the time of delivery by the employee?
So there are two aspects to this. One is that your SQC should mandate typically that for an audit of, say, supposing I have an NBFC audit, the resource should have at least one person who knows the NBFC regulation or who has got some experience with the NBFC regulation. The engagement partner should be, I can't use a manufacturing engagement partner to do a NBFC engagement. So that is how your SQC document will also be saying that people who know the job. First of all, I can't take the job as per SQC if I do not have resource to do the job. If I don't have technical competence to do the job, I can't take up the assignment also. Having taken up the assignment, the team composition should have skill sets for carrying out the engagement. If I'm satisfying them, then I think they score on that. So it's not the number which is important in my view. It is the skill set which is important in my view.
Agreed, sir. The skill set is definitely required. There is no doubt about it. We need the skill set.
That is what the AQM requires also, that you specify what minimum skill set I need. I may add more, but what is the minimum skill set? So, see, SA 600 says using the work of another auditor. So I'm assuming that every auditor is well equipped to do it. Every chartered accountant is well equipped to do it. But knowledge of his skill set, or knowledge of his, suppose he's doing an NBFC audit, knowledge of his NBFC requirements is a requirement which has to be satisfied.
Agreed, sir. Sir, one question which has popped up is, what is the IG which you have been referred in your presentation?
The implementation guide of AQMM, you can answer that better.
Yeah, I would just request all the participants to thoroughly go through the implementation guide. For any, as what Jayendran sir has also mentioned, for any clarification in respect of what requirement goes into that parameter, please refer to the implementation.
What I have done in 2 hours, I can't read the whole IG to the requirement. I have only highlighted major things which I have taken care of. The nitty-gritties are there in the IG. One has to go through. I think even the people who are implementing and PUs which are scoring self on the AQMM will need to look at the IG for their scoring, and the PR definitely would have to understand whether it's in sync with what the IG is saying.
Sir, one more question which has come up is that, in-house training would be a must, or they can go with the ICI training, or different forums training would be sufficient?
Any training is good. As I said, if I do not have an office where I can get all these people to come for training, ICA has got this self-training modules. I think there is a website which takes care of, you can log in and you can do self-training. That is also good enough, but I must have record that these people have been subjected to that. There are a lot of self-training modules of ICAI. They can attend seminars, that is also fine. ICAI programs they can attend, and where you cannot send them and you have used your period window when your work pressure is not there for doing a mass training for 2 days, 3 days, 4 days, that should be adequate. Internal training is required. Access to training is important.
Sir, if we go through the implementation guide on this para, it requires specifically for a written training policy also, which should mention that you can take up the self-evaluation courses, you can go through other ways, but a training, policy.
It is the first point I said, that the SQC must mention the training policy. That I want to give training to people. People who are trained only can do engagement. So that is the 4 marks which is there in the first section.
Yes, sir.
The implementation can be either internal training, either it can be ICI, self-evaluation training, and whatever is the methodology.
Yeah. Health insurance, is it the requirement for articles too?
As I said, that it's not necessary that entire 100% have to be covered for insurance. You may or may not cover articles. It's against the firm, but you must have a policy to have health insurance to score points over there. It is, again, I don't think it is a regulatory requirement that I must have health insurance. If you want to score 4 points, you must have health insurance. If you do not have health, if you don't want to spend on health insurance, you don't get 4 points.
Yeah. Sir, someone has asked about the documentation where I can't really make out completely, but what probably to my understanding is that, the audit team is there is regular updation through the meetings, but nothing for the clients. So there is no documentation for clients updation. And say it is done by one-to-one discussion. Clients updation is updating them on the...
So let me just recap something which is there in ICI standards on auditing documentation. Documentation is something where it shows that the work has been done, and it has to be such that it can be checked by another experienced auditor who was not engaged in the audit. So if your documentation, if your records show that you have done quality work, and it has to be such that it can be checked by, he should not be a person of that firm to know that मेरे firm में ऐसा policy होता है, तो he's the only one who can know about it. Any outsider also should be able to gauge whether quality work has been done or not. That is the requirement of documentation standard. So therefore, if you have meetings, in the way the recent trends have been, one has to minute these meetings, or the document should show that I have had a meeting, I have discussed, the queries have been resolved. The queries definitely will have answers to those points. First, I will raise the points and there will be answers to the points. That would show that the work has been deliberated upon, the queries have been deliberated upon, and then they have been resolved.
Thank you so much. We have taken up all the questions shared so far with us. I would request Deputy Convener, Center for Audit Quality, Ranjit Agarwal ji, to have the final words. Sir.
Thank you very much, Ruchika, and very respected the faculty for this today's session, Jayendran sir. I hope the kind of deliberation we have today for the knowledge of all the reviewer is very, very fruitful, and the kind of audit quality expectation of the regulator has increased from the auditor, and the expectation of theirs They want to see through the quality of the work the CF firm has done through the audit working paper file. And that's why all the regulator, whether NFRA or ICI, they've started going through the audit working paper file. How you have conducted the audit, whether diligently we have done our job or not. And if we have done diligently, then that's no problem. But if we have not done our role diligently or not done justice to the work allotted to us, then there is a problem. And so how to enhance the quality of the firm, this new concept of AQMM has also come up. And this AQMM will go a long way in the sense that the internationally also a new updated version of AQMM has started coming. We are the first stage where AQMM is going to be start from this year. And as a reviewer, it is our utmost duty to go through the quality of the audit working paper file, the various parameters, whether they have fulfilled all the marks required to be fulfilled for AQMM, whether they have been correctly done. Any deviation in the categorization of the marks, we should be report there, and whether the implementation guide has been followed in letter and spirit. So all these things is the utmost duty of the reviewer to go through the audit working paper file, and based on that, the AQM should be filled up properly. And if the quality of the firms enhance or increases because of your intervention or ICI intervention, the quality of the audit will increase. The organization as a going concern will be benefited by large, and that will help the build the economy and the country as a whole. So I wish all of you best of luck for this very interactive session on AQMM, and hope you will be benefited by this today deliberation. And I compliment and thanks Mr. Jendran for very thoroughly going through the various aspects of AQMM. And I wish all of you best of luck. Thank you very much.
So sorry. Thank you so much, sir. I am sure that the peer reviewers today who have joined us in good numbers will really benefit from today's discussion. It was really knowledgeable, very interesting to note how Jendran sir has covered each and every parameter, the requirement of the peer reviewer against each and every parameter. We have tried to cover almost all through the implementation guide, and I would reiterate, please go through the implementation guide. If there is any concern, you can get back to us through mail or through phone calls. But implementation guide would mostly be able to answer to your queries. And as convener, sir, in the morning, Durgesh had mentioned that we are having a digitization of the AQMM shortly. So we would be releasing a platform where, the peer reviewers can mark their scores against the firm scores, so that remains for the next review also. So you have the scoring of the firm and the peer reviewer, which would be available over the years with you in the system. Thank you, Jendran sir. Thank you. It was really nice to have you, and we would have you at further sessions. This is the first session we have had with the peer reviewers. Not all have joined, but they have all joined in good numbers. So we would be having one more session planned shortly on this, because we would want maximum peer reviewers, not maximum, in fact, all get covered before 1st April 23 mandate. Yes. So we would request for your support as always in the endeavors of the ICI, sir. Thank you so much, sir. Thank you. Thank you, everyone. Thank you.